So this is what you all hopefully saw in the email we sent out last Friday when the market took a big hit. We're showing here the worst 10 days in 1 day decline. And I believe it was 5.5 was Friday, April 4th downturn. So it's number 11th, but it's not in the top 10. But the key to this chart is, 1 year later, you'll see, with all but one exception, you usually see double-digit upside. That 1 year exception, by the way, is 2008, which is the great crash that we went through. So if you'll go to the next slide, I want to go into more details. And this kind of gives you a long-term view of stuff where at the beginning here you see the run up in the late 90s, which led to the dot-com bubble. And you can see 2000, 2001, 2002, where the market, takes a hit. And that, for my career, that was the worst downturn I've ever gone through. It was 3 years of a downward market, and I hope I never go through that one again. And then you'll see later on, 2008 again, we go through a major downturn, but that doesn't last as long, and of course a recession. And then we're off, and you see we have a big run all the way to 2022, and that's when the Federal Reserve is increasing interest rates to get inflation under control. And then we have another run up, and we peak in actually the major markets peaked in November, but the generals, the big firms, peaked in February of 25, and then we see the downturn. So one of the reasons I want to show it, although recently it feels really bad, we've been through much worse than what we're in right now, and you just kind of forget these downturns. So let's go to the next slide here, and this is where we're at today. And you can see on the end of the slide, how we peaked in February, and we're down all through March and April, and we continue to go down. Now, of course, let's see, Monday was down, and Monday and Tuesday were down, and Wednesday was up really big because Donald Trump announced the pausing of the tariffs. But what I want to do is actually study what happens when you have a major market downturn. I refer to this as a toilet flush, by the way. And this is going back. So we're going back to 2011 in a similar market. So you have this nice long run up that went on for a long time. And then you can see in August where you have that big downturn at the end of August there. If you go all the way where there's the red dashes there, yeah, there we go. So you see that downturn. So what we want to do, so you can see that looks really bad. Let's go to the next chart. And by the way, what I'm showing you repeats over and over and over. So point out August again there, Mike. That's where the red are, right. And so what you see is that's that downturn that we just saw earlier. And then you see the market kind of come back, but it's loose. It's like real wide gaps back and forth. And then you see another downturn. And notice that downturn's actually lower than the downturn before. And then that's the marking of the W. And then you start seeing it go back up. And so the bottom is that W look that you see there. And in fact, the one we're looking at there, a lot of people would call a head and shoulder, upside down head and shoulders. Let's go to one more slide. And this is a little later on. So we see, in August, the big downturn. Go to August there, Mike. Right in there, that we saw that before, and then we see it come back up and then hit another low, and then you can see the other pattern of the upside down head and shoulders coming up in December. But then after that, you see how it just takes off, and that's kind of what we're expecting here too. We expect that kind of W thing, and then like the chart that we sent out, the market will head up to new highs. So what the point of this is, be ready for, it'll look like we're coming out of it, and then another downturn that'll be worse than the one before. And then we'll head back up, and that'll be the end of it.